Welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I'm a financial mediator and business valuation expert in St. Louis, Missouri. Today, we're with Nolan Bradbury. He's located in Seattle, Washington, and the founder of Bradfield Accounting and Advisory. He has 2 decades of experience and offers clear and practical financial advice to business owners. I think that even one of the first things, and that's where I first see it, you have a tax return and the person who did your tax return does not go back to your internal books and then make the right journal entries to mark your books to what your tax return was or your filing was. And so you have a mismatch in there. But what are some other common financial issues that you see that could hinder the sale of a business that we also would need to clean up in some capacity?
Yeah, so I'll preface that answer by saying I think it's important to understand that when we look at financials, there's 5 areas. They're actually called the 5 financial statement assertions, meaning that there are 5 different ways that you really need to evaluate financial statements. So the first one that we probably all think about the most common is, are they accurate? Meaning, like, is the number in there the right number, right? So that's fairly obvious. But there are other things like completeness, meaning, is every number that should be in there actually in there? So if I have a bank transactions, do I have every transaction recorded for the month, not just are they the right amounts? You also have existence, like, do these assets actually exist? Do these liabilities actually exist? You have like rights and obligations, meaning that like all the assets and liabilities in the financials actually belong to the company, right? So like there's not like the owners and they've separately held off the books and you're sort of putting them in the company just to make things look better. And then lastly, we have like presentation and like disclosure, meaning like, how is the information actually presented? Is it in accordance with either GAAP or some other form of accounting method that's accepted? And that's sort of a separate conversation. What method do you have to report on? But so when you understand those 5 things, then you have to go, well, all of these areas can be a trip up, right? When we're looking at how we evaluate these financials. And so it isn't just one, it's the totality of all of them that typically gets people in trouble. And I think as business owners, we go, oh, well, all my information is there. Yeah, but that doesn't mean it's presented correctly. I've seen situations where revenue is recorded as expenses. I've seen assets put on the books where they shouldn't be. You'd be amazed at what gets done and never sort of captured or sort of looked at ever again. And to your point about the CPA preparing the taxes, I think there's sometimes a false sense of security that as business owners we place on the CPA that, oh, well, they're a CPA, they're doing all the work. You need to understand what you've hired them to do and what their responsibility is. They're not going to take on more responsibility and liability than they've been engaged to. Their job is to prepare the tax return in most cases. They do not audit, they do not review the information you gave them. They're not looking to see if it's correct. They're trusting that what you gave them is the correct thing, and then they're completing the necessary forms as a result of that. So what's been presented on the tax return, it should be correct relative to what you gave them. But if what you gave them is not correct, well, garbage in, garbage out. And that's then assuming that what's on the tax return actually matches what's in your financial records or your accounting records.